Okay, so as usual, we start out with looking at Market Watch. Go to the calendar for the day. 8:39, 9:45, 10, 11, and 11:30. These are going to be the additional auctions. We talk about them from time to time. It is a part of the reason that we focus on lunch. So on a day like this, and we see this on Tuesdays during that lunchtime, have an expectation that at 11:30, the market breaks out of a ledge or a shelf and begins running. Typically, when we see a breakout at lunch, we anticipate that it's a fake out breakout, but not on days when we have additional auctions. So watch out for both of these, the 11 and the 11:30. ISM and PMI, they are going to be impactful, but they're nothing compared to the job numbers this week. It's all about the job numbers. Wednesday, Thursday, and Friday, we've got job numbers. Today, yeah, don't get me wrong. Be aware of these. Know where the clock is. Look for a change in sentiment. We can have one of those mornings where everything looks like it's recovering. We get a little bit of news that maybe the market doesn't like and puts us right back down again. So just be aware of these. Lock in gains when you can. Focus across the board on what's moving. If you're trading Facebook or X Steel or whatever it is, keep your eye on the board, everything that's moving out there. There's a lot of ways to do it, right? We use the AD within the Market Watch, but you've got all those different old school market breadth studies that you can use too, right? There's a list inside of Thinkorswim, or you can make your own old school market breadth. These are good. They get the job done. Keep your eye on them. Watch as we come into these economic events. Look for a systemic change across the board. All right, bring it into the ES this morning. You can see we're running in a nice wedge. We were getting these higher lows with equal highs. Broke out of that wedge, and we're getting tangled in the floor pivot right now. Cross through the floor pivot. We do have a weekly floor pivot over our head. I just used the lines this morning. A 1% move would put us around that 43.37, and a downside 1% move would break us through yesterday's level, or Friday's. So we're going to deal with Globex low, which Globex low today has already touched and validated yesterday's intraday low. So two institutional pivot points stacked on top of each other. If we break that, then we have the low from Friday. And then past that, we got our 1% move. All right, so 42.50 to the downside. We're at 43.11. That's a COG line. We are expected to stay gravitated here. COG is an interesting concept. It is only applied to the ES. There's a lot of background to it. I don't believe the 43.11 or 44.11 has been validated as a COG yet, but so many of the ES 11s became COGs that we look at these as a suspicion that they possibly are going to be a COG, right? And until proven otherwise, I treat them like COG levels. You can see that even with a 1% move, we're still going to be inside yesterday's range. We don't quantify one of our trend days if it's inside yesterday's price. Doesn't mean that we can't trend. Doesn't mean that it can't be even really good trend. Yesterday was a perfect example of exactly the kind of trend we want to trade. Very clean price action, consistent message in the market. Talk about messaging all the time. The trading firms are often going in different directions. You'll have one kind of institution going long, another kind of institution going short. But when everybody's on the same page, when there are only shorts or only longs, it's a clear message in the market. It's so much easier to trade. It's so much easier to see. Look at that move yesterday that stopped at lunch where it should have. There was only profit taking. There was nobody going in the other direction, right? That is consistent messaging. You take it to a 1 minute, trade continuations, trade flags, get your money. Days like this are what it's all about. right? Because then you have the confidence to size up and get your whole month day done on a day like this. We don't typically have this clean of a price action when we are inside yesterday's range. So typically, if we're inside yesterday's range, we expect it to be choppy, nasty. We expect inconsistent messaging in the market, which is what this looks like. This is junk. It's tradable junk, but it's still junk. I don't want to trade this. I don't trade this. We're inside yesterday's range. There is an expectation that it's going to be junk. On the other side of that, however, if we were to turn on the volume profile, we would see there is a lack of volume in this area, so a lack of resistance in this area, and that we could and or should move through this relatively easy without a lot of chop and junk like I had the other day. So, you know, linear regression, mean reversion, coming back to the norm. The worst of the entire situation is that we are sitting inside of yesterday's level. So we resolve that, things will be a lot better off. Having said that, if we look at the two zones that we would normally focus on our given day, we have today's range inside the Globex, and then we have the broader range of yesterday. This is considered an inside day. It would be a phenomenal effort to see the ES break above yesterday's day. So the only way we're going to get an inside day today is if we get a blowout move or if we head to the other direction. Those are actually both possible, so I don't want to take one off the table. For the NASDAQ, same situation, higher lows, equal highs until we finally broke out of it. Got ourselves, you know, a real sloppy Busby. We're going to deal with the Globex high, then the pivot, then the weekly pivot. Along the way, we had that very beautiful price action yesterday. Hopefully you guys got some of that. You know, it's hard to trust a day like that, but that's why we look at all the road signs. Keep confirming that, yep, I'm still right. Yep, I'm still going to move in that same direction. Yep, come in and get another bite, you know, and just get as much of it as you can so that on days that look like this, you go golf, you go bake something in the kitchen, which is what I love to do. Find something to do other than to trade this junk. It's tradable. Yeah, it's tradable, but you know, it's a struggle. All right, so we've got our 1% marked out. They are underneath the weekly pivot and just past the floor pivot. So, you know, rather than having those lines marked out, just keep in mind that as we get very close to the weekly floor pivot, we've branched or broken through. Of course, you know, it's got percentage basis right there, you know. Same thing to the downside. These pivot points are impactful. When we get yesterday's low, there is an expectation of a market reaction. Again, with this market, just like the ES, there is no expectation of an inside day breakout. So even if we were to get to this level, I would expect a serious rejection. Right? There's a soft rejection and a hard rejection. I would expect a hard rejection at this level, probably bringing us back down to 14.7 if we were to hit it. Right? It would look very similar to this. We hit a level, get a hard sell-off. That's a hard rejection. But I wouldn't expect it to dump back down. Just have to pull back really hard, just like if you're trying to break through a door, right? Back up a couple steps, get a running start, give it another try. That's what the market does all the time. All right, we're coming up into a angled resistance on the S&P. Same thing if I were to draw one on the NASDAQ. We're either coming up into it or we've already broke through it. Keep those in mind. We've got to tangle with them before we get through them. Got the same thing in the Russell, but I believe with the Russell, we've already broke through it. And then got one in the Dow. So those angled resistance lines, you know, they're handy even if you're just using them to quantify where we are on the day. You know, are we above that level? Are we below that level? Are we moving towards that level? Or are we moving away from it? Right? Kind of get some bias, some perspective about where we're at on the day. Look at that VIX still confirming the fade off here is good. That's validating our move to the upside. We want to continue to see this head down. Nothing extreme, right? We don't want to see extreme moves in the VIX. We just want to see it continue to break new lows, just nice and easy. Now, the dollar is more concerning. We had a bit of a move in the dollar last night, started to fade back off against that angled resistance line, and we're resting at a support level. This is like the pause before everything starts rocking and rolling and the tape speed picks up and the orders are flying. We're right at that price shelf. It's like the pause, right? Take a breath. It's about to get wild. We're there. Make or break moment. The dollar falls here. We're going to see the ripple across the marketplace. If it starts to rise back up, not too much, right? Not too big of a deal. What we don't want to see is a consistent, persistent direction in the dollar. We want to see this thing pause and chop and not do anything and hang out, right? We don't want to see big, consistent, persistent moves. We don't want to see a consistent flow of capital moving into or out of this thing, right? Bring it over to the bonds, right? It's always stocks versus bonds, stock versus bonds. And yet, in the last few days, and actually in the last few weeks, it's been a little more difficult than that. We've had to be a little more nuanced than that. Even right now in this moment in time, we've got stocks and bonds both moving up at the same time. That ain't right. That ain't right. This is what we got, right? So keep your eye on it. We're looking for major shifts in capital, right? On any normal day, in any normal marketplace, seeing the bonds go up, we would have an expectation that stocks are going to go down. That's not what we have here. Now, if you take the time and go over to Tastyworks, they've done plenty of back testing and plenty of research on the 10-year, the 30-year bonds, the correlation between stocks and bonds. They've done all this back testing. You don't have to go and reinvent the wheel and try to figure it all out on your own. Go look at their research. It's really phenomenal stuff. For today, got the NASDAQ 100, no need for a filter. We are on pre-market change percent. We've got some green, a little bit of red, and quite a bit of gray. The gray is not necessarily a bad thing. It's just saying, hey, we haven't moved more than 0.5% in either direction, and it's going to stay kind of a faded, shaded gray. No worries. Looking at the S&P 100 on a watch list perspective, set it to extended hours so we can look at it in the overnight. There's 100 names. Rather than scrolling through all of the green, I flipped it over and just asked, well, how many are red today? In the S&P 100, how many are red or how many are flat? And I'd say about a third, which means on the other side of that, we have 2/3 that are in some way green, right? How many are up more than 1%? Less than 10, but it's a good collection of names. When you're looking at these names, try to find a consistent theme. Goldman Sachs, Citigroup, Bank of America, starting to catch that theme, right? And then you got like Netflix and Disney. Where's Comcast? You know, if you're going to see streaming services, where's the other ones? Or if you're going to see NVIDIA, where's the other chip names? AMD, Taiwan Semiconductors, Texas Instruments. Follow them down the rabbit hole. Bringing it over to the S&P 500, I did filter this down to 100 names, pre-market change percent. We got a lot of green on the screen. There are a couple of names in the red, but predominantly we're green, and even on the gray, they're looking pretty good, looking pretty positive here. Same thing here, got the extended hours on the NASDAQ 100, sorted by the negative names, and asking the same question, how many are negative or flat? More than a third, but less than half, right? We don't have to sit there and count these things up, you know, but on the next screen we can. Flip this thing over and start looking at, well, how many names are up and what are those names? Do they happen to be in a particular industry, sub-industry, subgroup that we may want to focus on? There's MU, by the way, and it matches with the other names that we were looking at, NVIDIA, AMD. There's our Netflix, but we got PayPal moving around too, right? Follow these things down the rabbit hole. Where are they going? They can lead you to your trades in the morning. What sectors are hot? What sectors are not? In the screener. Now, yesterday I had issues with the screener. I went in and I threw all of them out and I rebuilt them. It turns out where I was getting it wrong is right here where it says above or equal. Well, when I changed things, when I duplicated the scanner and made it a negative scanner, I did not change that little bit. So if you're going to have a negative scanner, it needs to be equal to or below whatever percentage, and that's where I had them wrong. Got it fixed. So now when we look at the scanner, it's doing its job. It's not broken. No names are down more than 1% in the S&P, and only one name is down more than 1% in the NASDAQ. Not a surprise, right? Everything is really bullish this morning. At the very least, not necessarily bullish, but perhaps a dead cat bounce or linear regression back up after the significant move from yesterday. So using halves, a half of 1%, we're looking at the S&P. How many names are up at least a half of a percent? 27 out of 100 names. That's 27% of the S&P. It's an easy way to say it, right? Looking at the Dow, we got the extended hours. 4 names are in the red. Another 4 names are flat, so less than 1/3, right? Less than a third are either negative or flat. When we flip this over, we can see energy, and banking. Not a surprise. Those two have been leading the way and tightly correlated too. Energy and finance have been wound together for all of the last quarter. If you're into that sort of thing, check from S&P would go to the NASDAQ, up half of a percent. At least how many names? 18 out of 100 names, right? And yeah, Pepsi had earnings, so Facebook's trying to recover from router issues. I call BS on that, but that's the official story. Follow these things down to an opportunity, right? It's the easiest way to get it done. Not a lot of names in the news this morning. The NIO deliveries, Ford and GM, that may be some pretty interesting news because of this lawsuit that they've been struggling on. Seems like they're finally going to get that out of the way. Yay. So not a whole lot on the news front, for these, at least nothing new, right? Most of this stuff has already been discussed recently. We did get into sectors and industries yesterday, just at a quick glance, and this is set for change percent. What happened yesterday? Energy, industrials, and utilities were in the green. Everything else were some shades of red. This move in XOP continues to just shock and awe. It's totally amazing. I'm in that, by the way. Yay. Yay for me. Need to bring up a trend spider real quick. I was trying to get away from trend spider and use TradingView more often. The problem is when it comes to doing that, TradingView doesn't allow me to use my watch lists in ways that I like to use my watch list. So, there's always limitations, right? It's why we got to have so many different services, because we can't seem to find one service that gives us all of what we want all in one spot. These are 2 watch lists with a collection of 600 names that have weekly options. And typically I scroll through this in the pre-market looking at how many names with weekly options are up more than 1%. And I do use that filter. You can use something like a half of a percent or a quarter. It's fine. But I'm looking at the most aggressive, the tightest kind of scan that I could apply to such a situation. We've got a good collection of names, and it's worth following those names down the rabbit hole. But it's not a surprise that it's energy, finance, and energy and finance. And it's probably got a little bit of energy and finance. But when we get rid of those and we start looking at things from the sector perspective, airlines are looking really good this morning, for an example. So I would be focused on airlines. Crypto got back above 50. So, take a look at crypto this morning. A few names in the red, sure, of course, but predominantly in the green. Marijuana. Green or flat. And I do it this way because there really aren't I mean, there are ETFs for like marijuana, but there's not a really good ETF for EV markets, for an example, right? And so it's better if I just build my own watch lists and treat it as my own sector. Now on Thinkorswim, you can do that by using a plus sign or a negative sign in between the names. So you can build your own index on Thinkorswim, and that way you don't need the whole watch list. For an example, I could put all of these names into one symbol with one set of candles on Thinkorswim and call it an EV ETF of my own design. That's how cool it is on Thinkorswim. But you can't sort things by change percent in the pre-market on Thinkorswim. You have to use workarounds. So EVs are looking pretty good this morning. Airlines, EVs, blockchain, all looking really good. And marijuana looking good this morning. So got a lot of names across the board, right? That's what I got for you guys. Have a good morning. Be safe. Be careful. I will see all of you tomorrow.